All right, we're live, baby. That was quick. All right, what's good? Good morning, everybody. Let me go ahead and adjust this bad boy. There we go. Good morning, everybody. How we doing on this fine, what is it, Wednesday? Thursday. Wow, this week is flying by. I think it's because I was traveling on Monday, so it doesn't really seem like this week has been super long, but I'm excited to be here. What is it, October 12th, 2023? Let's get it, right? What are we here to do? We're here to get 1% better. We're here to close the gap to where we are, where we're meant to be. We're here to compete against ourselves and only ourselves, right? We're here to show up and be committed. Consistency beats out talent every time. Consistency literally beats out everything else every single time. So if you can remain consistent, amazing things will happen for you. So this is part of that, right? That daily investment, being where you need to be, doing what you need to do in order to accomplish the goals that you want to accomplish. So, good morning to everybody. Hope you had a great night's sleep. And I'm excited to get into what we got going on here. Andre, good morning. Coco, good morning. Let's see. We got big data this morning. So, that's, of course, what we are going to be super focused on and what we're going to dive into. So, I'm actually going to go ahead and start with that. And for anybody that's watching, whether you're watching live or via replay, make sure that you throw your ones in the chat, right? We're here trying to get 1% better. And that is setting your intention to get 1% better, which is very important because you don't just get better by accident, right? You don't just consequently end up better, right? This is something that you actively have to put forth the effort and the intention to do in order for it to be sustainable, right? To be replicable, which is super important. Now, going forward here with what we got going on, let me tune in and grab this inflation data. So we got CPI data. CPI is not the Fed's preferred measure of inflation. That is PCE, personal consumption expenditure, right? But CPI is something that moves markets, right? It doesn't always. A lot of times people, bank on it causing some huge move. It doesn't always cause some huge, crazy stock market move, but it most definitely can. And that's something that we'll be looking out for today. In terms of my own kind of predictions, I didn't swing anything heavy into today, right? Because you typically want to just let data like this come out and then you react to it. I'm more bearish than anything just because of how inflation data has been trending as of late, as well as stuff with the housing market and also energy, right? Especially with this war kind of kicking off, I don't really see, or this war escalating, right? I don't really see this data being positive. I know that the war is more recent, but that was on top of already high oil and gas prices. And food prices were creeping back up as well. So if I had to guess, and the market doesn't pay me to guess, right? You got to put money or position behind where your mouth is, but I'm leaning more downside than anything. Let's see what we got here. We got jobless claims also, so let's dive into that. The U.S. initial jobless claims, 209,000 versus 210,000 estimated. So jobless claims were better than expected, right? Not really positive for the market. You want them to be worse than expected so that the Fed can ease up on interest rates. In terms of U.S. September consumer prices, those are up 0.4%. The estimation was 0.3%. So inflation data was worse than expected, right? Kind of in line with what I just talked about. U.S. September CPI, excluding food and energy, up 0.3%. Consensus was 0.3%. So that makes sense, right? It's food and energy, right? The more volatile of the CPI data, it's the more volatile of it that is causing it to be worse than expected. It looks like core CPI, right, excluding volatile food and energy prices, was exactly what expectations were, which is 0.3% increase. However, when you factor that in, right, energy and food is really what's driving the miss here in us having worse inflation than expected. So U.S. September consumer prices increased 3.7% from year earlier. Core CPI up 4.1% over year. And then U.S. September CPI energy prices up 1.5%, food prices up 0.2%. So because of that, we got U.S. short-term interest rate futures fall after the CPI report. NASDAQ futures briefly erased pre-market gain. So we've got some negative knee-jerk reactions initially to the data. You see SPY took a drop, and now we're kind of popping. Whether we fully recover that drop, right, we'll have to wait and see. We are overall bullish, though, right, which is important to recognize. I want to remind everyone of that, right? We're in the middle of firing a nice daily double bottom on SPY. We're in the middle of hitting weekly uptrend support on SPY. So we are bullish on SPY unequivocally on the longer term, right? We shorted yesterday because that is what paid initially, right out of the gate. We shorted because short term, that was movement we could take advantage of, but longer term, we still remain bullish. Now, if we do get a sell-off here because of this data, that would be an incredible gift, right? An incredible gift from God himself to get a sell-off here, because that will allow everybody who isn't in position, right, to get in position, because we got that crazy, weird, like run-up end of day. Yesterday was a low volume day. Low volume means low conviction. So a lot of people, aren't necessarily looking to put a lot of money into the market unless they know something, for sure. So we had the lowest volume day that we've had in a number of weeks, right? Well below normal average volume. And that was likely because we got this data today. So this data really solidifying a lot of things. But yeah, it'll be important to see kind of how we interact with our extended hours levels, pre-market high, pre-market low, etc. And then move from there, right? But if we do get selling, that would be a huge, huge, huge blessing, because it gives the opportunity to position both long term and short term, to the upside, which some people might have missed. People are busy. Life be life, and you got a lot of stuff going on. You might have missed Friday, might have missed Monday, right? And the paydays that corresponded with those Friday, Monday, Tuesday, and yesterday, even though it's to the downside, right? You might have missed those upside days, and this is opportunity for more of that. So it's important to recognize that downside days are still opportunity. I don't want to play into that narrative that says you can only make money when the market's going up. It's not true. But it's like people feel more FOMO when they miss out on the market going up. So this can help cure that, alleviate that FOMO-itis that you got going on there. So everybody throw a 3 in the chat if you're understanding what I'm talking about in terms of sentiment and where we're at right now, right? It's really important to know the overarching picture. Know the overarching picture, so that way when you have questions, right, or you're scared, or you're this or you're that, you're like, what is the big picture? Like you might be, I don't know, maybe I got no idea. Maybe you're walking through like a scary haunted forest or something, like, one of those like haunted forest type like Halloween attractions, and you're scared, but you're there with like Jason Momoa or like The Rock or like Jason Bourne or Tom, I don't know, Tom Cruise in Mission Impossible. It's like at the end of the day, is something scary happening? Yes, but who am I with? Right? What is the larger overarching picture? Nobody's gonna mess with me if I've got, I don't know, Vin Diesel or somebody here beside me. And I think that's what's important about your broader market exposition or broader market expectations, is that people will sit here and be like, oh my God, I'm scared. We got some red. Do you see the weekly? Right? Do you see the daily? Like, there's no reason to be afraid of some red. Can you get it? Yes. But overall, what is the overarching picture? Make sure that that's the backbone of what you do. Because if you're out here trading without a backbone, you're not going to be able to hold against the tests that are going to come, right? So you've got to have that backbone in your larger, your overarching kind of analysis, right? Your overarching sentiment, either bullish or bearish, is going to be your backbone when you're operating in markets. By the way, sorry for the sound quality. My new mic was supposed to be here. It's not. So Amazon, you got to do better, because you told me it would be here overnight, and it's now been a day and a half, 2 days. So, we got the high expectations nowadays in 2023. Microwave society. Let me get my products. In terms of top news, strike heats up. So the United Auto Workers announced the 8.7 thousand members at Ford's Motor Kentucky truck plant have joined the picket lines as talks failed to progress. The plant, which builds the Ford F-Series Super Duty, Ford Expedition, and Lincoln Navigator, is Ford's largest in terms of employment and revenue. Ford called the UAW's decision grossly irresponsible but unsurprising. The automaker reiterated that its offer makes a meaningful positive difference in the quality of life for its 57,000 UAW represented workers. Now, bigger picture, the strike has sparked widespread layoffs. General Motors, ticker GM, Ford, and Stellantis, ticker STLA, laid off 4.8 thousand workers at factories not included in the strike, blaming a chain reaction in the manufacturing and supplier network. While analysts have called the layoffs a simple reality due to the impact of lost production, the UAW contended that the job cuts were aimed at pressuring UAW members to accept less favorable contract terms. When the UAW strike began, Deutsche Bank estimated that a full strike would hit the Detroit Three's earnings by about 400 to 500 million each per week of lost production. Investing group leader David Alton Clark believes a deal in the UAW's favor would drain Ford's coffers. Quote, I see Ford's dividend being cut and the stock price plummeting 36% to $8 before too long, he warned. Singular Research said GM and Ford will likely see a 1% contraction in profit margins, assuming a 30% increase in labor costs over 4 years. Now, in terms of strike watch in Canada, GM and Canadian auto workers struck a tentative labor deal shortly after a strike was initiated at 3 of the 4 automakers' facilities. The news came in days after Canadian trade union Unifor reached a labor contract with Ford. Meanwhile, over in Hollywood, negotiations between studios and actors broke down after the two sides failed to agree on SAG-AFTRA's latest proposal. Note that Las Vegas workers are also picketing MGM Resorts and Caesars Entertainment casinos as they contemplate a possible strike. Don't go to casinos right now, right? These casinos just got hacked. Sorry, guys, I'm like fighting some type of cold or something. I picked up in Florida, but these casinos just got hacked and they got, millions and millions and millions of dollars stolen from them in the form of ransom. And now the workers are protesting. There is probably a -% chance you're going to win anything in the casino right now because of how much money is flowing out of their pockets. So if you are a casino person, just stay out. Go somewhere else, right? I don't know what you want to do. Join the market if you got to scratch that itch that badly, but please stay out of the casinos because, man, and it's the same casinos that got robbed. The same casinos that got robbed. Caesars and MGM are getting absolutely roasted right now because their workers are contemplating a strike. Imagine you get robbed blind and the casino is shut down for days at a time, costing you hundreds of millions of dollars, and then your workers strike right after that. I know their executives are going through. But in terms of this, we got a few different updates on different strikes that are going on right now that I think are important. In terms of the auto workers, right? We haven't really been playing Ford or playing GM or anything like that. In terms of opportunity for GM, if we do, we're right now beneath, let me see, yesterday's low at activate, yesterday's hourly low. What is that? 30.78, right? I don't know why my chart thing is acting up today. Go ahead and snap that to the low, right? 30.78 on GM. I do like GM to the downside. Here, we've got a nice little hourly head and shoulders on GM. You could also just pay attention to the relevant portion, which is the hourly bear flag, composed of yesterday's hourly high, which is what here? 31.98, and yesterday's hourly low, which is 30.78. So if we close beneath 30.78 on the hourly, right, we remain beneath it. It's a great spot to get GM puts. We're already beneath that right now. So you want to go ahead and set a little alert for when we cross back above. Cross above. GM retrace, hourly bear flag breakout. Look at puts. Boom. Right, so we got a nice little opportunity here to short GM based off of that news. We love it, right? Love the opportunity. Again, we've got to remain beneath 30.78, but lotto puts would be a nice little look there to take advantage of GM based off of that. Let's see what we got going on with Ford. We got anything here looking enticing with Ford? Not as much as with GM. I mean, they definitely lost more overnight, probably based on this news. So easier kind of trading, right? It's got a very clear, very crisp hourly bear flag. If Ford loses the current pre-market low, it can continue right lower. But overall, in terms of crisp and clean plays, GM is really looking like the better of the two. Now, they also mentioned the actor strike. The actor strike, something we want to keep an eye on. We want that resolved. Why? It would be a nice boost for the Netflix longs, right? So Netflix had nice weekly uptrend support. It's been holding it, right? We're looking for it to continue to hold just like it did last week. Netflix got a little bit of bad news here this week as some executive left the company or was fired or replaced, basically because it's not making as much money off of the ad revenue tier in certain areas that it thought that it would, so they replaced that guy. That's not good news, right? You always want to hear whenever you integrate a new business system that's supposed to bring you in more revenue than it's bringing in what was projected. It's not, right? There was something where they got some data point that's showing they're not making as much money as they should be making. And that was something that happened like a day and a half ago, right? Which obviously Netflix didn't like. So if we get some resolution here on the actors front, then we can get a nice pop, right? Not to say that it still doesn't hold weekly support, but you want to see this type of thing making positive movement, not, falling out at this point, especially when it seems like they've been so close. And then the last big thing, yeah, we went over pretty much all the big strikes that are going on. But yeah, MGM and Caesar, we can check those bad boys out, see what they got going on. They've been kind of bleeding up, right? MGM has, in terms of any type of like negative sentiment. Let's see what we got going on here. Something shorter term can manifest, right? We're like currently testing like yesterday's high. Excuse me, yesterday's high. If we can, remain beneath yesterday's hourly high, and then we come back down and we lose 37.50 on MGM, could be a nice spot to short MGM. So that would make for a nice little hourly double top if MGM loses 37.5. So at that level, crosses below, MGM testing, hourly double top breakout, something that could be worth keeping an eye on, right? So boom, we got a lot of data, a lot of value to be squeezed out of that first headline. Let's keep it pushing here so we remain on time. And I'm going to pop a recall so that I remain, cognizant, alive. In terms of tech news, back taxes. Uncle Sam coming for you, Microsoft. So Microsoft dipped 0.4% after hours on Wednesday after the tech giant disclosed a notice from the Internal Revenue Service, which said that it owed $28.9 billion in back taxes plus interest and fines for the tax years of 2004 to 2013. So the issue pertains to the practice of transfer pricing, generally used by companies to reduce their tax burden while shifting profits to tax havens. Quote, we disagree with the proposed adjustments and will vigorously contest the NOPAs through the IRS's Administrative Appeals Office and, if necessary, judicial proceedings, said Microsoft. The company does not expect a final resolution in the next 12 months. So it's just one of those things where it's like, okay, something that's going to be resolved in court. It is what it is. Microsoft doesn't really care about it too much right now. Again, this isn't something that's going to even be resolved within the year. So it's kind of like, all right, why are we even paying attention to it at this point? So, Microsoft dipped down and then it recovered, and now it's just dipping again just because everything is dipping with the inflation news that we got. So I'm not, super concerned or anything with that right now. But, just important to know that, hey, even these large corporate entities got to keep up with the taxes. They might pay less comparatively, than us in taxes, but they still got to keep up with it. In terms of Microsoft could get a daily double top fired if we lose, what is that low here on the hourly, 329.14. So you can set a little level there at 329.14 on Microsoft. And of course, set an alert. That also happens to be pre-market low, it looks like. So Microsoft testing pre-market low and hourly double top breakout. Nice. So got some puts on watch from Microsoft. In terms of financials news, bank support. China's sovereign wealth fund, Central Huijin Investment, marginally raised its stake in the country's four biggest banks for the first time since 2015, including Bank of China. The move kindled hopes that Chinese authorities will step in to prop up the stock market amid an exodus of global funds. Note that Beijing is weighing fresh economic stimulus and may raise its 2023 federal budget deficit by issuing additional sovereign debt. Huijin's modest yet symbolic investments are very likely aimed at supporting share prices, said Redmond Wong, market strategist, Saxo Capital Markets. Huijin's stake raise lifted Chinese banking stocks, while the CSI 300 index rose 0.9%. So China is literally floundering. Like, they are on their last leg here, really just fully aboard the struggle bus. They have subscribed to it and are quite avid users of the struggle bus. And that's just where they're at. Economy very weak, money pulling out. Yeah, tough situation. IPOs, in terms of IPO data, week debut. Who would have thunk it, right? Everybody was talking about strong IPO market. The IPOs we got recently were not that strong of debuts, right? They really, really weren't. And I don't know why the hype was there. Wasn't really warranted at all. And it looks like Birkenstock, broke their straps here as they debuted Wednesday at $41 per share after pricing its highly anticipated IPO at $46 a piece, which valued the company at $8.6 billion. The iconic shoemaker's stock tumbled through the session, finally ending 12.6% lower at $40.20 a share based on Birkenstock's SEC filings. The stock began trading with a higher price to earnings multiple than sector peers such as Skechers, Crocs, and Steve Madden. Wider concerns regarding Birkenstock's financials remain, given the premium valuation it had sought in the IPO. Seeking Alpha analyst Douglas McKinney called it a dangerous stock to buy on account of its weak profitability. Now, in terms of today's markets, in Asia, Japan, we're up 1.8%, Hong Kong, we're up 1.9%, China, we're up 0.9%, India, we are down 0.1%. In Europe at midday, the FTSE in London up 0.8%, Paris up 0.5%, Frankfurt up 0.7%, the Dow up 0.4%, S&P up 0.4%, NASDAQ up 0.4%, crude up 0.8%, gold up 0.4%, Bitcoin down 2.1% to 26,742. In terms of today's economic calendar, oh, by the way, all of that data at this point is like kind of irrelevant because we got CPI data, which completely changed all of those things. So as of right now, looks like we might open flat on the S&P, flat and bear flagging pre-market. So I'm liking it. It's looking like an exciting pre-market. So far, we've been able to really roast the market and make a lot of money in the first 15 minutes, 30 minutes, right, that the market is open. Typically by 10 a.m., we've already had a number of super profitable plays, which is really nice because you have 15-minute, 30-minute workday, right, for your money going and getting you 40, 50, 60%, 100%, over 100%, right? And then you can go about doing your workday, but you're making sure that your money isn't just sitting there not doing anything for you. You want your money to be working just as hard as you do. Doesn't mean it needs to be working as long, right? You don't need to be trading 8 hours to be super profitable. In fact, if you trade as long as the market is open, you're likely going to give that money back to the market. But you do want to be there to take high quality plays like we've been doing and make out like a fat cat, like we did on Friday. We were super bullish all the week leading into Friday, and then we were able to bring home over 1,000% and over 2,000% profit on certain plays, which is freaking unheard of. You can't do that anywhere else but in the market. So if you're aware of what's going on, you put yourself in a position to understand how to position, you're good to go, right? You're good to go where your money can work for you 1 day a month, 1 week a month, whatever your work schedule is, you have time to do this, which I think is really the most underrated thing about trading or about investing. You know, I've got doctors, Fortune 500 executives, professional athletes that have come through, taken the course, learn how to execute and do execute, right? There is nothing, right, that you don't have the time to do when it comes to markets, especially with short-term, medium-term, and long-term opportunity, right? It's not all day trading. We've had some really nice swing trades as well. Just look at Disney this week, right? Bringing home the bag for us on those swings. Netflix, shorter-term swings that we had to the downside, which paid. Now these Netflix longer-term swings to the upside. There's something for everybody. Now, in terms of what else is happening, we'll finish up here with our rapid-fire bullet point rundown. Minutes show Fed officials favored holding rates steady in September. Disney announces price hikes at Disneyland and Disney World. That's another positive thing for Disney, right? Which is already paying us here on these long swings, paying us quite nicely, showing a lot of relative strength, in respect to the rest of the market. One MDB scandal. Goldman sues Malaysian government over settlement. I don't know if you guys are familiar with one MDB, but if you have time, it's a fun thing to look into. Pretty crazy. Chipotle, ticker CMG, raised prices for the first time in over a year. Oh, wow. Dialysis stocks tumble on Ozempic kidney failure study news. U.S. Space Force halts generative AI use on security concerns. Yeah, probably, guys. What the heck is the Space Force doing with generative AI anyways? Who cares? BP's deal, ticker BP, to buy stake in Israel's NewMed Energy on track. FTC proposes a new rule to ban hidden fees charged by businesses. And then these analysts delve into AI's global impact this decade. And the Las Vegas Strip is facing concerns over a consumer slowdown. Yeah. That's not where I want to be, right? With these gambling stocks, right? MGM, Caesar, they're getting hacked. People are protesting, right? Striking. And then you've also got kind of overall consumer slowdowns based on the economy. Hard knock life. Hard knock life. I'm sitting here looking at the weekly for MGM, drawing this weekly downtrend resistance because when we hit it, I'm definitely going to look to short the crap out of it. But that's neither here nor there for now. Let me see. Will that little resistance come up? Not yet. I'll just make sure to check back in on it later, but could make for a nice little long swing opportunity, just like I was talking about. But that'll wrap us up, put a bow on it, and take us out here, right? We got into a lot of great information, and we went over the most important data drop of the week, which is that CPI data. So, sorry, I was trying to move this Ricola around. But inflation data, that's going to move the market. Overall, we are net bullish longer term, right? Based off the fact that we hit weekly uptrend support on SPY, right? We're in the middle of firing a nice daily double bottom on SPY that paid us out the wazoo on Friday, right? Paid nice on Monday, paid nice on Tuesday. Today, based off the inflation data, we could get some downside. I absolutely welcome it, right? Mark off that pre-market low, look to take advantage of interactions that we have with it, whether that be a peak below and fail or whatever. This data doesn't guarantee downside, but if we get it, this is where you kind of look to see what's retracing breakout, what is giving us the gift of retracement, and then looking to load up there as well. So we'll make that money off the downside, then turn around and make that money off the upside because we can, right? And once you learn the tools to do that, there's no reason why you got to be humble. Roast them both ways, make money both ways, and keep it pushing, right? So that's it. We'll wrap it up, put a bow on it, take us out there for the October 12th, 2023 session. Had a great day yesterday. We went like 6 for 7 on trades, right? Only our last, or maybe 5 for 6, only our last SPY puts round didn't work out. That was after we already had like 4 or 5 successful rounds of SPY puts previously. So it ain't really a big deal on that front. I'll take that each and every time. But other than that, everybody, there's going to be more content dropping today. Make sure you go check that out. Show love, learn, soak up that knowledge, get 1% better. And I'll see you back here tomorrow morning. We got Q&A tonight. Make sure you're there, right? Money is won, trades are won during the preparation stage, not the execution. Executing a trade is a formality, right? Getting that mindset ready to execute, be able to put money behind it, and be able to take profit when that profit comes. That all happens via the Q&A. So make sure you're there for that. And other than that, guys, I'll see you back here tomorrow for our last Premarket Prep session of the week. Have a good one. Peace.